Hey traders, Park here with another market update. Let's go to the last week. I apologize for missing last week. So this was the last week, 11/24, and you can see what the labels look like. And you can see from these two pink lines right here, the S&P 500 was stuck fighting this gap area right here. Excuse me. But you can see how the futures was up. Everything is pretty much bright green. Energy was down, but it wasn't bright red. The dollar is still declining, which means it's good for equities and stocks. And you can see oil is still down. I know they're predicting that gas price is going to be below $3, but all of this is good for the market. But we are seeing a lot of topping. So I'm going to get rid of last week. I'm going to go to this current week. And this is what we're looking at for this current week right here. We actually broke above the gap area right here. And we're going to actually looking at the seasonal analysis for the S&P 500. So if you look over here, we're looking over for a 10-year period. We can see for November we closed eight. We had an expected move for November, expected move for November of 3.56%, and you can see how we exceeded that. This yellow line represents the expected move or expected season analysis percent change or move. So we forwardly exceeded that by 8.87%. And for December, over the past 10 years, 6%, the S&P 500 has been down. But it's only been down 0.88%. And we can see right now on our percent change, we're actually up for December 0.73%. Today is the first day of December. So it still remains to be seen what we're going to be doing, what happens for this month. But for the most part, that's what is expected, and we can see it right here. And we can see this white line right here is the actual open. This purple line is the previous close. So we can look at our labels. Everything is fairly green. Like I said earlier about the dollars continue going down lower, and you can see the yield is going down as well, which is pushing up the bonds, which is pushing up small caps. I'm going to bring this label up just a little bit, and we can see the oil and, like I said earlier, about the gas prices. But these are different sectors right here. So I'm going to get rid of that label, those labels, and I'm going to bring on my sector season analysis labels. Where is it? And I'm going to push it down here, and I'm going to push it for the month of December. And let's let that load up. These are my sector season analysis and labels. I'm not sure why real estate and the Russell are not coming up. But for the most part, you can look at the Dow Jones uses up 60% of the time over 10 years. Over the last 10 years, the Dow Jones has been up 60% of the time, 0.1%. And we're looking at when it says actual, that's the percent change for right now, and that's 0.95%. And you can see staples for the last 10 years has been up on average 60%, 0.28%. And right now we're at the actual percent change is 0.48. Same thing with utilities. It's up 50% of the time over the last 10 years. 0.43%, and we're actually pushing up 1.18%, which means utilities for December is our best month, but you can barely make out here, but it says actual 2.12% for real estate, and the Russell right now is at 3.15%. I don't know. I'm gonna have to figure that out for my season analysis sector labels. But I'm going to go ahead and take those off, and I'm going to get into the upper screen. So let me take that off, and let's get into the upper part of this graph. And we can see with these white arrows right here, this means that this had a push up with increasing volume. And you can look down below with the unbalanced volume percent change that it's actually pushing up these last few days as well. This is the cloud represents the bottom of the cloud represents average on the 16 day. I need to change that to a 20. So apologies for that. So I'm gonna look at that on a 20. Look at it on 20 day average versus 16. But the bottom part of this cloud is 20 period average, and the top of the cloud represents 25% of that. So it'll be 5 day average. So this your 5 day average is top of this green cloud right now. We can see this is continuously pushing. We can see it's saying inside month. I'm not sure. That's another thing. I'm about to fix my labels, but this should be above. This high is above the previous month's high. So within our 52-week high and low, it's at 84% of the range between the 52-week high and low. You can see the ATR for the spot is 26 for 3 month period is $26.18. This week we pushed up 11. This is from the close. So these percent changes right here are actually from the close, from the previous week's close. So this week we pushed up 11.79% for the month. I should have done this yesterday, but this is currently for this month. But I showed to you in the lower labels how we pushed up for the month of November. I think it was 8 something percent, and for the quarter we're up 7.4%, and for the year we're up 20% from our open. So I'm going to push this over, and I'm going to get rid of my drawings for a moment. So let's clear out my drawings, and we're going to pay attention to the indicator on the screen. Each one of these little purple or light blue lines represents the ATR Fibonacci level. And we can see right here, this, like I said before, this is why I expect to move for November or over our season analysis. And we can see how we exceeded that, and we pushed all the way up 8%. So now we're in December, and this was that expected move down 0.88%. But right now we're actually pushing above that. So, and we, like I said, showed you before, we're pushing above that gap area. And let me push out. I'm pushing out for the reason I'm looking for this high over here. So we broke above this high, this previous high back here, and we're actually pushing above. So on my fib levels between the ATR, so here's our ATR low and here's my ATR high based off a three month average. So the next fib level between there is at 462.58. So this is why I'm hoping or thinking that the S&P 500 is going to hit next week, possibly, if we still getting good news within the market. But we could push down below to this lower fib level down here as well at 450.23. So it's just a waiting game for right now. Let me get my drawings back on there. And I am going to move this off the screen so we can see things better. And we can see here's still that resistance level right here. Here's our Fibonacci high right here for the S&P 500. And you can see from here, these are your bullish divergences right here. These what these triangles at the bottom mean. And you have a bearish divergence here. But this move pushed up with volume. And you will see that next resistance level is coming back from over here at let's see, this candle 46207. So that's what I'm looking at for the S&P 500. So we can make our rounds, and we can let me get rid of this because it's going to slow everything down. So we should be back at speed. So we can make our rounds, and we can look at the XLK, which pulled back, but it's still pushing up, and it broke above this last resistance level right here, and it's pushing up. And you can see from the unbalanced volume, it's kind of flat. So you can almost look at it like this. This is kind of like an accumulation period. You're not getting a lot of movement. You're getting a lot of chop up here. So it's facing a resistance area because it's already at all-time highs. I think that's all-time highs for the XLK. So what I'm going to do is I'm going to draw a field from here. I really should do it from here. Since it broke above that, just to get an idea of where we are. And with my fields, this is just 10% above this area right here. 10% of the range above this high right here. And you can see how it's just been choppy in this area right here. Excuse me, but I'm looking for a break above 186 for the tech sector for it to continue to push on into the new year. And we can go to the NQ NASDAQ 100. And it's pretty much the same pattern, just like I just showed you from there, because NASDAQ is full of just tech stocks. I'm not expecting a push down, but I'm looking for a push above this area to this next field, or at least 10% of the actual range here. And you can see how it just ranged in here. Here's your bottom of your range, and here's your pushing. Here's everything pushing up. And I've listened to a lot of traders every time calling for new highs before the year's out. But the NASDAQ needs to break above 1676.7 for that to happen. But it needs to have a strong push above this last high right here, which it is struggling in this area to break above there. But it's at the 10% of the range where it found support. And you can see it's almost the same thing as the XLK, where it just has a lot of accumulation. So we can go to the Dow /1L. I don't have any markers on here. And you can see the Dow is doing the best, I think, out of all of them. It's breaking above some new high, so that's what's its range. So its next area of resistance is going to be at its all-time highs right here in this red box right here. But let's draw a fib and see. It's breaking above, broke above there. Here's that 10%. That next fib at 124 is just right below that. 121 is right below that one. So that's the Dow and RTY. It's the Russell E-mini futures. And let me get rid of whatever old drawing I had on that one. And that's why I said with the yield going down and the bonds going up is good for the small cap stocks. And you can see how everything really just struggled in this area. Now it finally broke above. So it's heading towards the 78.6 field right here. And then you have another area of resistance here and here. But hopefully it can push above and go across over into making new highs as well, like the other indexes. But you can see right here where you had the small pullback and then this push above on the unbalanced volume percent change. So let's go to the scanner. One of the things I was looking for earlier was relative strength percent change within the NASDAQ. And I'm looking for things basically on par with the NASDAQ over the last 20 bars, 3 million volume. Looking for a P. I'm not looking for trash stocks with P ratios below 1. So between 1 and 100. So let me change that to 50 and let's do our scan and we can go look at a few stocks. And I'm sorting it against the shares. So these are ones that could really almost high flyers possibly because they have the lowest amount of shares. And you can see this one only had 4 million volume. VSCO, consumer discretionaries, information technology. I probably should have cross referenced the Nasdaq. I'm gonna leave that alone. So let's look at some of these ones with the least amount of volume, and let me change one other thing. The percent change. I wish I could change this. So I'm gonna put this to 10%. I think it should be 10. So let's see. So let's look at some of these are 10% change on the day with the low against the share count. So FL, Foot Locker, Douglas, Emmett, real estate, consumer discretionaries, and energy. So we can go look at Foot Locker real quick. We can see Foot Locker. I think this was when the whole Nike. Well, no, this is not when the whole Nike thing happened. When Nike, it's probably here. When Nike decided to take shoes out of their stores and basically run their own thing in their stores, especially with the Nike discount stores. But you see Foot Locker is pushing above. It pushed above this area of resistance right here. You can see with these bars right here. And it looks like it doesn't have any resistance up into this gap area right here. So I can mark, if that works right, I can mark out this gap area, and I'll mark out my gaps with pink lines, duplicates. So it's headed towards this gap area right here, and we can go look on the 5-minute chart. I think this is it right here, where it just pushed above and just pushed, basically it pushed down for a few minutes today, right at its hourly mark. So this is 8:30. This would be an hour, and then it pushed up from there, and it's holding in this area. So we can go back to the daily, and I want to draw a fib, but it may not be reasonable. Because I usually like to look at things from a drop period and then a high period. And that's what it looks like from that fib. You can see they're struggling right there, but I don't really like that. So let's look at it from this drop period. And you can see from this high right here, it's actually hitting the 78.6. So I would look for a continuation and a bump at 30. Once you hit this whole dollar right here, you can look for a small pullback for an entry, possible entry, and then look for a continuation, especially with Foot Locker. The holidays coming up. D.I. Douglas Emmett. It's real estate. D-I-D-E-I-D-I. I don't know. The whole real estate sector was wrecked, but this could be one coming back. But you can see, I will wait for it to come out of this range here. But I know mostly people are pushing for tech stocks and buying pullbacks in tech stocks. So this is DI. Consumers go to. It's a $2 stock. Go to. I've looked at this one before. Let me get rid of all these old ones. I think this is one of those Chinese technology stocks or school stocks. I don't know. It's been in this downtrend where it based out right here, and it's trying to push above. So it's in these lower twos right here. So I would look for a push above this 288 area right here, where it actually came to. So I'm gonna put a notification for myself. If the market's going good and it gets above 290, that'll be something for me to look at. And I'm gonna mark out these areas of resistance. So if it could possibly get above here, so 365, then so on and so forth. But I want to find which one is lower, here or here, because it dipped down, so it's gonna be down there. So let's do this. You can zoom back in, and this is 214 fib, and let me get my fibs better adjusted. So this one's actually 446, and this low was I looking at that low or was that previous low? So this low right here. And this low right here is at 222. So with this in mind, if it breaks above this 290, I would look for a small pullback when it hits 3 and maybe back to 290, and then it push above from there. So that's one. And ETRN, this is energy, ETRN. Let me do this, XLE. So the energy sector has been going down, which is good for oil prices. So that, I'm not sure about that one, but I'm going to look at it just because it's up over 10% on this day. ETRN. Because I really don't want to be going to any weak sectors. This probably has news. This is a huge push. But unlike the, this is nice. It only pushed down and it's pushed above, broke above, all of that. Any news reported early talks for potential sale. So it's looking for a sale. So I don't know if we get bought out, it could possibly push above this area, $10.46. Where's this all time? So it can possibly keep going, but it's on news of a sale. So that's on that energy stock. And let me lower this to 5. I really don't want to look at the percent change. I want to look more towards, I want to cross-reference. So 1 P1, and we have, let's see. These are some of the stocks I'll be looking to. But this is going to be the end of the video, and we can look at one stock that I've really been paying attention to is PLTR. I should have some lines drawn out on it. So we can look right here. Palantir pulled back to the $18. Is this $18? $19 level. Actually dropped down to the lowest $18.62, but it's pushing above. And today it pushed with volume up, and it's pushing above now. So that's going to be it for this video. But PLTR is going to be one of my favorite ones right here. And you can actually look at in the video also for this last pullback here. And I already have fibs drawn out on it. So you can also look for maybe a 460 pullback and a push above. Or you can look for AMD, should be the same situation as well. these small pullbacks in these big tech names. MSFT, Microsoft has been really just a monster, just pushing up. But this is going to be the end of the video. I wish you the best. Stay safe out there, and God bless.